Hey Patrick.
Hey Mark, how are you doing? How was the week?
Yeah, it was yeah, I don't know man, crazy again. How was your week?
Yeah, for me, nothing fancy happened to be honest. I just bought myself a really heavy blanket to sleep better at night. But besides this, I learned a little bit more about leverage yield farming. But yours sounds more
Oh,
interesting.
okay, okay.
Why was
Um,
it crazy?
well, maybe it's not that crazy to be honest, but yeah, I somehow built up a crush with the girl on the next door or something. And so yeah, that has been taking my attention for some reason, and it makes no sense to me because she lives way too far away for pheromones to hit me or something. So yeah, it makes no sense to me. But and for the rest, I was also catching up to an old friend I haven't talked to in a while, so that was also fun. And he's also into crypto.
Ah,
And
okay.
but well, let me put it like this: he's just a normie, but he has like a Binance account and buys some crypto, like randomly.
Ah, okay.
But he told me that he was invested in AVAX and Solana,
Oh, wow,
so
okay.
he has good taste, I guess, for a normie.
When when did he get in at those two tokens? Any
Uh,
idea?
I think a while ago, actually, a
Wow.
couple of months ago. So yeah,
Wow.
he has done really well for some reason. But like he's just a normie, he doesn't know what yield farming is and these kind of things. So he doesn't have a wallet or anything. So
Hmm.
it was yeah, that was pretty interesting. But it's also pretty interesting to hear other people's perspectives, on crypto in general.
Yeah. So you both got in at a similar time, or is he in for just a couple of months or weeks?
um, I think, I mean, yeah, I mean, I started really this year, I would say, and I think for him it was like he started in March or something. So he started a little bit
Mm.
later than me, also on my recommendation and pushing. But
Ah,
for the rest, he's just on his own. Yeah, he's basically on his own with his investment decisions. He just thinks of his own thesis and these kind of things. And he also still invests in TradFi. So yeah,
ah.
so he also showed me a couple of things about TradFi that I didn't know. So yeah, he's also yeah, up to date with that. So that was cool.
Hmm.
Uh,
Interesting. So I'm just taking a look at the
mhm.
Solana chart, and when he got in at about March or so, it was at $13, and now it's about roughly 200. So yeah, good
Wow.
for him, I guess.
Wow. Yeah, man. Yeah.
That's
It's crazy, man.
crazy.
In crypto, even someone who isn't, spending 24/7 on crypto, they can still make amazing returns, as you can
Yeah,
see.
absolutely.
So, yeah.
Yeah, the market is crazy.
Yeah. And the funny thing is, like, I tell him to yield farm with his AVAX and Sol, but
Mm.
he's too lazy to do it. So
No.
that's the funny thing. So that, yeah, for him, it's just purely something he does like 5 minutes, or something. And for the rest of it, he's not spending time at all thinking about it. So that's kind of interesting.
Yeah, I think it's a totally normal progression. You
Hmm.
basically, at the beginning, you just buy and hold, and
Hmm.
then later on, you ask yourself, okay, what can I do to outsmart the market? So he gets into more altcoins and the decent stuff. And later on, at a couple of months, but I think you were pretty quick with this. You got into yield farming and tried to make it a more active way. So I
Hmm.
think he's on a normal way, I guess.
Yeah,
Good to
yeah.
hear.
So that was pretty cool. And also, I caught up with my boss because he was in the sushi pool, if you remember, like the
Yeah.
UCC Dai sushi pool. And he has been tracking his portfolio every day per my recommendation.
Oh,
So he's tracking the value of his SLP and the USDC and DAI value in the pool. And I also taught him about the analytics. And he was telling me excited yesterday that he got 30% APR on his USDC DAI because there was some
cool.
spike in the activity, like a volume spike that day. So
Mhm.
he's now thinking of adding more to that position. So that's yeah,
Yeah,
that's pretty yeah. It's fun to hear him enjoy it.
yeah, nice. So getting 30% on stablecoins, yeah, I think,
Yeah, it's quite good.
yeah, exactly. Um, yeah, great. So, yeah, do we want to transition to the next thingy about
Um,
our
yeah, sure. Do you have anything for your week, by the way, or just nothing? So
no, nothing really fancy. It was just a normal week.
okay,
Nothing related to crypto. So no airdrops, no bigger
okay,
things. No, nothing special.
okay.
My friends get a little bit quieter, which got into crypto. So I think it's a sign that the market is a little bit boring right now.
Hmm. Hmm.
And yeah, but I have a thesis around this. What I would like to talk to you about a little bit later. So for me, but this week nothing fancy happened.
Sure. Um, and did you make any changes to your personal allocation?
Um, my portfolio changed a little bit, but not due to the fact that I made some changes in itself. Just some tokens are
Hmm.
getting them down really sharply.
Okay.
So for example, I have this ICE token, Popsicle Finance,
Hmm.
and it declines a lot. So basically, my portfolio is right now, let's say 70% ETH, um, 20% BTC, 5% Sol, and then the last percentages, there are just some smaller coins like the ENS token or the ICE token
Hmm.
or a little bit of Phantom, a little bit of Bank, and those allocations changed a little bit,
Okay.
but only due to market volatility, not due to something I did on purpose.
Okay. It's funny because it's for me, my portfolio has also changed, even though I didn't do anything.
Yeah.
But for me, it has changed the other way around because yeah, you know, I have a big percentage of my portfolio to Illuvium, and
Mm,
it gained 64% last 7 days. So
wow, that's so
that has
crazy.
a yeah, that's a huge impact, of course. But I haven't calculated the impact. But I'm gonna, yes, you know, even napkin math will tell me that yeah, my percentage of Illuvium has even increased, you know, as a percentage of my portfolio.
Yeah,
And I think for next week we should also like recalculate our percentages again, you know,
yeah,
as
good
it's
point.
you know, the next month.
Absolutely. By the way, on your Illuvium
Hmm.
thing, you mentioned last time IL.WTF.
Yeah.
Uh, have you taken a look at it this week?
Um, no, no, I haven't. But why do you think it has become worse? Oh, because of the
Yeah,
okay, I see. Because of the
because
price spike.
Illuvium got up like crazy, and
Yeah,
Ethereum, I
yeah,
think it stayed roughly the same.
yeah. Good point. Oh my God. Yeah.
Yeah.
Okay. Yeah. There's probably some pretty heavy impermanent loss. I haven't checked it, unfortunately. Well, maybe fortunately, because I would be pretty scared. But yeah.
Yeah, I'm wondering, do you want to take a guess if something goes up by 64% and the other one stays the same? What's the impermanent losses about this roughly?
If I were to take a guess, I would say like maybe 15%.
15%?
Yeah. If I were to take a
Hmm.
guess, but we should, you know, check the calculator sometime.
I would think about 3%.
3%. Oh, okay.
Yeah. Let me check it. Oh man, on point. But no means this was not set up. It's 3.05%.
Oh wow. Wow. Then
That's
I totally overrated my the impermanent loss.
well, okay. This is interesting. This was a pretty good guess, and yeah. So
Okay.
I
Wow.
think I think you didn't get wrecked. Obviously,
Hmm.
3% hurts, but
Yeah.
yeah, if an asset goes up by 65%, I think that's fine, right?
Yeah. I mean, I think impermanent loss is a first world problem as long as you get high enough yield.
Yeah, that's true. The yield on ILV, how high is it right now?
I mean, I haven't checked it in a week, but last time it was like I think 425% on the pool or something.
Oh, that's so
So
crazy.
that is yeah, it probably outweighs the impermanent loss.
Yeah, your investment with ILV, it's pretty awesome to see.
Yeah, but yeah, let's see what happens next year when the unlocks start.
Yeah,
It may be like a steady decline, but yeah, we'll see.
yeah, sure. I hope not, but we will see.
Hmm.
Okay, dokie. Was there anything remarkable that happened since last Friday? Anything that got on your radar?
Yeah, a couple of things that were remarkable to me. The first one was that Robert Breedlove had an interview with Raoul Pal. I'm not sure if you have listened to this one yet,
Mhm.
but it's
Who is Robert Breedlove?
Robert Breedlove is he's like a Bitcoin guy, but like he's like a Bitcoin philosopher kind of, you know. So he's kind of a relatively down to earth guy, I would say, and you know, he's a bit like the Hasu of Bitcoin, I would say,
Mm.
a little bit like that. So he had an interview with Raoul Pal of 2.5 hours. And
Wow.
it was the first interview in which Raoul Pal basically laid out his entire framework from beginning to end, including he started basically at the beginning of the human financial civilization and ended in the metaverse. You know, so he went all the way through
Interesting.
what happens in the you know, early 90s or like even earlier, like early 1900s, etc., all the way back to now and the future. So that was a pretty interesting podcast. Um, Another thing that stood out to me, but that's maybe a little bit off topic, is that yeah, so last week was the World of Warcraft Classic Seasons of Mastery launch,
Yeah.
and there was this hardcore race where if you die, you basically delete your character. And there's this guy called Joker D, and he's a mage who was AoE farming as a, mobs, you know, to level. So
Mm.
he was just farming many mobs, and he wasn't questing or anything like that. And he died like at 50 and like 53 or something. So
Mm.
in a Western Plaguelands, really high level. So he spent like, you know, it cost him, I don't know how many hours. Let's say it took like 30 hours or something, you know. So first of all, he managed to level for 30 hours AoE grinding without dying a single time, which is already super impressive. But then he died on something stupid, like he was attacking some casters. and
Mm.
he died near Utherscript. I showed you the video as well. And
Yeah.
what was awesome then is that so he was the number one at that time, in terms of level. But there was another duo called Tactics and Tommy Salami, and
Uh-huh.
it's a rogue and a red paladin of all things. So
Oh,
it's a
okay.
really weird combo. But they were the second highest pair, and what they did is so they went to like one bar before 60, and then they went to Uther Stomp, and they dinked on the mob that killed Joker D as a tribute.
Oh no.
No, but
Okay.
as a respectful thing, not
Are you
as a
sure
thing.
that's a respectful
No.
thing?
They did it as no. They wanted to take revenge on the mob, that killed
Ah,
them.
okay, yeah.
So it was a respectful thing. And then they had a little parade in Ironforge, and then they went to bed because they've been, been gaming for like I don't know 50 hours or something.
Yeah.
And they also gave the how do you call it the viewers to Joker D. I don't know how you call it if you
Ah.
give your Twitch viewers over to someone else,
Yeah,
right?
yeah, I know what you mean,
You
yes.
you host someone. I think it's called
Yeah,
hosting.
exactly.
Yeah,
Yeah.
so he hosted Joker D. So it was really super beautiful gesture.
Oh, cool.
So that was another thing that was I think pretty remarkable. And the final thing that I thought was remarkable was there was like an argument between Suzu and Kane.
Yeah.
Yeah, about well, it's about just I would say in general about Ethereum and how expensive it is, and also about optimism and its failure this far. So
Mm.
yeah, I mean Suzu and Kane are both people I respect a ton. So when these two people argue with each other, it's interesting because I don't know like I don't have a predetermined condition of which side I take, So I really have to think about which
Mm.
side do I think is right. So, and that was also then followed up by discussions on app only with Udi, and also I think on Bankless they also probably had some interviews around that topic.
Mm.
So I thought that was pretty remarkable last week.
Yeah, I agree. What's your current opinion about the state of the argument and yeah, what do you make out of it? Any actionable advice for you or someone out there out of the debate that followed and the argument that went on Twitter?
Yeah, I find it really really hard to uh, to make up my mind because I respect Kane a lot, and I think he's relatively balanced and not necessarily in a bubble or something. So he is so bullish on Ethereum's future and on optimism, and he's also willing to work for it. So I almost feel like he knows something that I don't know, about the chain and about the future of Ethereum rollups.
Mm.
Um, so I'm hesitant to just bash Ethereum just like Suzu has, even though for me Ethereum is also pretty much that, like I don't touch any protocol other than my Illuvium harvesting, and that's it because of the gas is just too high.
Mm.
And there are some things that I would like to actually get into, like Keeper, for instance. But
Mm.
yeah, the fees are just prohibitive. So I do, yeah, I kind of agree. And yeah, I kind of agree with both from different perspectives. So yeah, for me, I don't think there's a clear winner. I do, yeah, I am a little bit skeptical about, the thesis that every chain will connect for the security to Ethereum. I think if people clearly like cheap, fast new chains, so
Mm.
what's going to prevent people from just moving on to the next new chain for a long time, like for the next 5 years? So
Mm.
yeah. So yeah, what do you think?
Um, for me, it's not about making up my mind who's wrong or who's right. I'm thinking more about how do I need to be exposed in order to be hedged in a correct way with which resonates with my opinion. And I'm struggling a little bit with this. So Kane is obviously pretty big on synthetics and on the Ethereum network, and so he's big on optimism, and he tries to push the optimism network right now really hard. And I think it's a good point. And there is also, I think, this could be a whole game plan from Kane to specifically go after Suzu to get emotions in there, and he knows that Suzu will fight back. And this is basically the crying call for the whole Ethereum network that we need to scale right now and not within the next 5 years. So from this point of view, I like it. And from a hedging point of view, I'm not quite sure how to think about this. So my biggest back right now is Ethereum by far, and Solana a little bit. Um, I'm not quite sure because Suzu is arguing that the Avalanche is a really good chain, and I have zero exposure to Avalanche. And yeah, I don't know if I should change it. Maybe I should put 1% into Avalanche and not 70% into ETH. So just as a hedge, let's say for example, Avalanche will become the awesome chain, and if Ethereum will decline, for example, Yeah, I think the 1% could easily grow into 10%, and the 70% could easily grow into 60 or 50. So I'm not quite sure if I'm hedged in the correct way. But in order to make a guess on who is the winner and who will fail, I have no clue. I'm really deep into the Ethereum ecosystem, and I think this whole modular blockchain design, I really like the idea behind it. I really think it can work. My question is basically, yeah, when? Because let's say there is a growing demand in the market, and you can see it. The retail people, yeah, they talk about it most likely on Thanksgiving. You see that different companies buy different stadiums. They branded the Staples Center in Los Angeles to Crypto.com arena. So I think retail will come. And my question is basically, um, on what chain will retail be be playing? On Ethereum, no fucking chance, no chance, no chance. It's way too expensive. But I'm not quite sure if they could onboard on Polygon, for example, because Binance and Coinbase they are implementing layer 2 off ramps and on ramps with their currencies to Polygon. And yeah, I'm just wondering, where will retail start? Because there was this retail mania a couple of months ago back on Binance Smart Chain. And yeah, I'm just thinking about this a lot. Where will retail find its next home? But I don't have a clear answer about this, but I'm pretty sure that it's not Ethereum, it's more like, yeah.
I think retail will start with the players with the best fiat on ramps. So right now, Polygon has a pretty good fiat on ramp, and AVAX has a good fiat on ramp. Phantom
Mm,
doesn't have really a good fiat on ramp, and Solana also has a good fiat on ramp. So
mm,
I think I think Polygon, Solana, and AVAX are the ones where retail will start. And out of these three, I think I think Solana will actually be a very good place for retail to start because of the Phantom wallet.
mm,
It's such a
yeah,
way more intuitive wallet than MetaMask.
yeah,
Because you don't even see your own tokens in MetaMask, so that's super confusing and scary for like a newbie. So I think actually because of the Phantom wallet, people may onboard to Solana first. Because
yeah. I agree. Yeah.
I actually have the same discussion with my boss because he has tried sushi now, and there's not that much in Polygon that I would recommend him to. Maybe Aave,
Mm,
but
yeah.
the rates are quite low, and maybe in Curve Track Crypto, but yeah, that's about it. So he was asking me, so what should I do? Where should I go? And then he checked the Aave on Avalanche, for instance, but on the website because I pointed him to Aave, and but there the rates are also not super high at the moment.
Mm,
Um, and to be honest, for Avalanche. Yeah, I haven't looked too much into it. It's really, yeah, not good on my side. But I heard at least that it's relatively complex with that there's different chains or something on Avalanche, like point something, point E and point something, and the
hmm.
tokens have something at the, a suffix at the end. So
Yeah,
I think maybe Avalanche is maybe a little bit confusing for someone who is new, whereas Solana, I would say, is not confusing. It's very smooth, right? Yeah, the protocols look a bit different, but for the rest, I would say Solana is not super confusing. The only thing is confusing is the ether scan, of Solana.
mm.
But
But it's getting better.
yeah, it's getting better, and like an ether scan isn't really that important for a newbie. So at least if you're not a super inquisitive newbie who likes to know everything. But
Mm,
I think most people don't even look at their Sol scan transaction after they've made a transaction. So
yeah, that's true.
I don't think that it's too big of a factor.
Mm. Yeah, I do like the experience of Solana by far the most. It's the UX, the UI, it feels much more fun. And when you make a quick transaction, for example, on Ethereum or on Polygon or whatever, the MetaMask experience with approving the first transaction and then making the swap and click, it takes a second. And on Phantom, it's just like it's all done. And yeah, I think I really like Solana and Phantom from this point of
Mhm.
view. And yeah, let's see. So for this cycle, I think my bags are filled and I can't change them due to the German tax um regulations. But for the next cycle, I'm pretty sure that other chains will gain a lot more traction, and it's not the Ethereum one. It's more like a layer two or a side chain. I would guess.
Yeah. Um, do you think we've already peaked in terms of Ethereum? Maybe not TVL, but maybe like new like wallets or something actively using Ethereum.
Yeah, that's a good question. You mean interactions for the main chain, right? Ethereum main chain.
Yeah.
Yeah, I have two thoughts. So, if the market goes into the end of year bull market and everything goes up, so price goes up, I think we're pretty much at the peak because people are not willing to make transactions. I know a couple of guys who have 6, 7, or even 8 figures, and they talk about that's way too expensive for me. And if those quite rich guys say it's too expensive, by no means I think there is the opportunity to grow more on this side. But if we go into a bear market from here on, which I don't think, I have some more opinions about this. I think the addresses could get up, but right now the gas price is at about roughly 100, and this means for a swap you pay about $100 to $200 if you include the improvement of the tokens in there. So I think if the price stays the same or it goes up, I think we're pretty much at the peak right now. And if we go into more sideways or downwards market and the gas prices will get to 50 Gwei and below, I think there will be more action on the Ethereum main chain, but I think the gas prices don't go below 50 Gwei within the next couple of months. How do you think about this?
Yeah, I agree with your view on the gas prices. They seem to have been quite high the last week or two. So I think it's also partly because of NFTs and stuff, but still. So on one hand, the fact that some NFTs are still doing really well, it means that there's still plenty of traction on the main chain despite the high gas fees. But it's probably not. It's probably really wealthy people who are gambling on the NFTs basically, and not people who are new to crypto. They're not going to spend, I don't know, €100 plus for gas, and then also like
Yeah.
€1,000 plus for an NFT. So yeah, I think also the gas will remain relatively high. I do think the TVL of Ethereum will of course grow as more institutions get in and more people get into Curve and stuff. Like the traditional yield farmers who farm like for a relatively low interest, but at a huge amount, like millions, billions, or something. So I think the TVL will increase, but I think the number of new users like added per month or something, I think this will start trending down maybe a little bit. I do think maybe people will still, when they get first onboarded into crypto, they might try Ethereum main chain for like one transaction, or like one thing because it also has the best on ramp. ETH is by far the best on ramp. So some people may do one swap and then to bridge it or something, or they try one thing and then they realize, oh my god, I spent €50 in gas.
Yeah.
So I think then they will immediately get burned and then figure out ways to do it in a cheaper way.
Yeah, that's interesting. So do you mean they will make a mistake and they pay the high fees once and then they will ask themselves, okay, what the fuck did I do? And then they will take a look somewhere else.
Yeah, so I think that they will try Ethereum, not knowing that the gas fees are super high, because they've seen some old videos or something, from like 6 months ago or whatever. So they see a video of 6 months ago on YouTube how to do in a yield farm or something in Ethereum, and then they try it, and then they see that the gas eats their profit, and then they will start realizing, okay, this is too much. Let me move on to a different chain and start researching other chains. So I think there will still be like newbies on Ethereum, but I think they won't last very long if they realize that the gas fees are eating them alive. And even for me, it took me like weeks or months before I realized, because it's not unless you really start spreadsheeting your costs and all these kind of things before you realize, oh my god, I'm actually losing money here. So
yeah, that's true. That's true. Yeah.
So anything remarkable happened for you?
Yeah, I have this I heard this theory, and I don't know what to make out of it, and maybe it's just noise, but the theory is basically the following. So you know what a dead cat bounce is, right?
Yeah.
And for listeners, a dead cat bounce is basically, imagine you have an asset, and the asset goes to we can take Bitcoin for example. So Bitcoin in what was it, in May? When was the Coinbase IPO? In May, or when did it peak?
Yeah,
Roughly about
I
this
think April,
time.
May, somewhere like that. I think the IPO was probably in April and then it peaked in May.
Yeah, and the theory is basically the following. Whenever you have a peak, you get the dead cat bounce, and dead cat bounce is basically that prices go up to 65K and then it declines quite sharply, and then there is the bounce, and the bounce goes to 50% of the last all-time high roughly. So it would be at around 50K, for example. So from 65K to 30K to roughly 50K. And then it goes down again. And there is this theory I got from Julian, and Julian basically is in a group with quite a lot of let's call it whales. And there is this theory of a Gummiball. What is Gummiball in English? It's
Chewing gum balls or something.
A rubber ball,
A
which
rubber
basically
balls.
bounces around. And so the a rubber ball, I'm not sure if it's the right pronunciation, but
Yeah,
if
rubber ball.
the ball goes to the ground, it bounces back up. And this time, the dead cat bounce was basically not dead cat bounce. It was like more like a rubber ball going down up, and it got elevated due to the fact that the futures ETF got approved, and now it will decline like a normal ball, so it will go down again. I'm not quite sure what to make of it, and it's just a theory out there that it's basically the peak was in, but there are so many indicators that speak against it. But it's interesting that people start thinking about it. So this for me means that people are totally fucking clueless what is going on right now. There is this there are so many theories out there, like, okay, this could be a rubber ball bounce, this could be a dead cat bounce, this could be the beginning of the bear market, this could be the flushing out of all the leverage so we can pump till the end of the year. Other people are start arguing that the cycle is still intact because there was no real euphoric phase, and it will peak in the middle of next year. Yeah, I just have not much to bring to this discussion. Besides that, I'm a little bit confused on what is going on right now, and I will mainly just hold and think it will all end with an euphoric phase. And if the euphoric phase comes within 1 month or 3 months or 6 months or 12 months, I'm fine with everything. But I think that a lot of those models that we pretty much looked to and relied upon, in quotes, over the last couple of years, basically, they start getting challenged really hard. The stock to flow model, for example, from a stock to flow model point of view, we should be at the end of November at a 98,000 US dollar. I think we are roughly at 55K right now. So I would be really surprised, and I think that's not possible right now. And at the end of this year, the stock to flow model says that we are at 135K. So yeah, this is also almost a 2.75x from here on. I think that's not that really possible. So yeah, this is something remarkable that happened to me last week, which I realized. So I don't have a clear opinion, and I think the market is really confused right now what is going on. Yeah, what do you think about this whole theory for the next, let's say, 12 months? When do you think, do we see an euphoric phase, and do we even see a euphoric phase, or have we already seen it?
Yeah, yeah, it is very very interesting indeed, because so many people have had such bullish thought, especially towards the end of the year, so that
Mm.
I don't know, Bitcoin would reach, I don't know, 80K. No, no, sorry, not 80K. I mean, Bitcoin would reach like 80K or 100K or 120. Like Ralph Paul has been really bullish on ETH as well towards the end of the year. And I'm thinking of
Mm.
even all the bets that Peter McCormack did, with other Bitcoiners about the price at the end of the year, and they were all way higher than what it is right now. So
Mm.
yeah, I mentioned before that I don't think that we will have like a huge boost until the end of the year, because yeah, I don't know, everyone is expecting it, and if everyone is expecting it, then I feel like it will probably not happen. It, uh,
Mm.
it cannot be created from the consensus. Like the consensus doesn't really happen that much, I would say, for in a longer term. So, and I think, yeah, to be honest, I'm a little bit as confused as you are about this. So
Mhm.
I think we will have probably maybe just a slight increase compared to what we have now, maybe like 5 to 10% increase, and until the end of the year, and that's it. I think maybe then people will be disappointed, and then maybe the next year it will start pumping as people are starting to get down on crypto. I think maybe it will be something like this. But yeah, I will agree that I'm a little bit as confused as you are. Although I'm not surprised that you said that Julian considers this to be the rubber ball that's going down, because I thought this was an up week, right, in crypto, or maybe I just didn't take a good enough look. But didn't BTC and ETH and stuff go up this week?
So he's I have no clue if it went up or down, to be honest. I have no clue. I don't know where we started. So he thinks that the rubber ball theory is wrong. Um, and I also think that this theory is not correct. I just wanted to bring I just brought it up because I think it's one more theory out there. And I think a lot of models will get challenged right now. And yeah, it's just a confusing time. And there was over the last couple of years, it was basically for me in every month pretty clear what will happen right now. So the August was quite bullish, and then the October was too bullish. So the September was a little bit down. This was yeah, something that you could also forecast in quotes. But November, it's so weird. There are so many concepts out there which need to be bullish, basically the stock to flow model and the end of year rallies and stuff like this. And then there is the theory of the market does what the less the small amount of people think, so it hurts the most people. I have no clue. I have no idea.
I heard
Just
another
model, I
theory, by the
guess.
way, to add to your confusion. I heard another
Okay.
theory today that as people are having Thanksgiving, and they're all coming together, and the young people are basically telling their families of how much they made with crypto this year, and
Yeah.
so they expect basically a huge onboarding wave in the next weeks to months or something. So that could maybe contribute to an end of the year rally. But yeah, I don't know, man. I don't know. I do think in general, like just like you, that
You.
just like you, that the top is not in for the whole cycle. So I do think there will be a blow off top, and it won't just be this because yeah, this is just too weak of a top, to really fade from here, I think. Okay, so we had a little disconnect issue. So let's move on to the next topic then. So what excites you, Patrick, about this week and about the future?
There are three things that excite me quite much. The first one is that the last topic we just talked already about. So I'm thinking about what if there is no pump in December? Will all the models skill reset? And so for me, an exciting thought right now is to imagine that the cycle will go till July or June of 2022, and I'm thinking about yeah, what can I do on a daily basis which is productive to yeah, to not look at the charts every day and ask myself, okay, are we peaking? Are we not peaking? Are we going down? Are we going up? So this is pretty exciting to me to just get a different yeah expectation from the market. The next thing I'm pretty interested in is that um we had this discussion the last week or so, or in one of our evening meetings, where we talked about could it make sense that we have a 20 to 25% stablecoin allocation? And there are some benefits and some downsides. So this is a concept I'm pretty excited about to learn a little bit more about how to put it into a portfolio. Do you just let the money sit on the side and wait for a dip? Do you yield farm with it? Do you yeah, enter positions? Do you get out of positions? So how do you play this whole 20 to 25% stablecoin game? Because the longer I'm into crypto, the more I think it could make sense to have this stablecoin portfolio allocation. And the last topic I'm pretty excited about is that yeah, so one of our investors in our company, he is an investor in another company, and there is this guy, and he's developing a trading bot. And so I've done a little bit of research about trading bots. I have no clue if they are legit or not. Obviously there are a lot of bots out there who are not legit. There are like scammy bots, and they they trade a lot, and yeah, they make much noise. But if the market goes down, they will get down as well. And if the market goes up, they say, okay, I made 50%, but wait, dude, the whole market got up like 60%, so a nice underperformance. So this is pretty interesting to me, the trading bot thing. And yeah, so basically those are the three things I'm trying to think about. What if the market tops at July or June next year? What about the stablecoin allocation? Could it make sense for you and me or even other people out there to have this in our portfolio? And the last one is the trading bot thing. Do you want to go into a specific one out of this?
Just with regards to keeping your money on the side, I would refer to, yeah, I don't know which podcast it was, unfortunately, but one of Sam Trabucco's podcasts. He mentioned
Mm-hmm.
that, that Alameda, they do calculations, right, on what is the best way to spend their portfolio and to invest it.
Mm-hmm.
And they also back tested basically, the value of having some money on the side and, or maybe just yield farming with it, as opposed to being fully invested. And they found it is plus
Yeah.
EV to have some money on the side. So maybe that is quite
Mm-hmm.
something to look into. And with regards to what to do with it, yeah, personally, if you have, let's say you have 20% of your portfolio allocation to stablecoins and just yield farm with those, it would make sense for me to yield farm with those and not just keep them in your wallet. So I would still
Yeah.
yield farm with them and not just hold them because that was one of your questions that you wanted to find out, unless you think there is some kind of risk about USDC or USDT or whatever, some token risk. But otherwise, I would just yield farm with it.
And what do you think? So let's say there is a liquidation event. Let's say we go from 65K. Where does in another day where the 10K drop from 65K to, or was it 60 to 50? There was this 10K drop.
Yeah.
Do you think they try to get in at this time and sell when the market recovered a little bit, or how do you think that they play this getting out in and out of positions, or do you think they don't do it and just yield farm with it and wait for the bear market to come where it's an obvious good time to buy?
Yeah, I think it depends on what you consider a bear market. But I think, for instance, what we have had in May, like there was just a pretty big drop in the Bitcoin price and the ETH price and these kind of things. I think here they would probably enter out of, so they would switch their stablecoin position into a risk asset position and wait until it goes back up to previous high probably. So yeah, I think even even for even the 10%, from 60 to 50, I think that's probably even worth switching your stablecoins for. But I think they probably wait a little bit for it to drop a little bit lower.
Do you think so let's imagine we had a 25% stablecoin allocation, and the market was at 69K a couple of weeks ago. And right now the market is at, let's say, roughly 55K. Do you think if we had a 25% stablecoin allocation, now would be a good time to get back in and wait for a higher price to get back out again? Or would you say that it's not low enough, just stick to yield farming with a stablecoin and wait till it gets lower and don't try to make those smaller trades?
Yeah, I still think let's say we dip 10%, okay, just for argument's sake. So I think even a 10% dip is already worth investing because I think it's pretty likely that within, let's say, 3 months or something, the 10% dip will be made up again, right? So that means you earn 10% in 3 months, which is 40% annualized. So that is higher than you would get normally on your stablecoins unless you are like a really good farmer. So I think even a 10% dip is worth entering, as long as you are relatively sure that you will reach the all-time highs again in the future and within a decent time frame. But for a lot of crypto, that is definitely possible, like ETH and BTC and these kind of things. I mean, we haven't had our lifetime's high so far, right? So I'm sure that will still happen. So yeah, I think it's definitely worth it even at that level, because the yield on your stablecoins normally is not that high, So yeah, it's definitely worth it.
Do you think such a strategy can honestly outperform just buying and holding ETH and BTC? Because if you get, let's say, 30% on your stablecoins in a year, which is super high, and then you throw in some of those trades, and then you get to, let's say, 50% or so, do you think this could outperform just holding?
I mean, of course, in a year like this, it wasn't worth it, right? But I assume that when they did the backtest, they also included bear market years. Yeah, so it's not really a fair comparison. So yeah, right now it would have not outperformed holding, but if you take the average of the years, then it may do.
Yeah, fair point. I think I might do it, honestly. I think right now I would stick to just holding my asset because it makes no sense for me to trade right now due to the taxation stuff. But I think if the market peaks someday somehow, and I'm pretty confident that it will within the next 12 months peak someday somehow within the euphoric phase, and then I might really go into those 25% stablecoin allocation. Right now I'm almost 100% risk on, and the last time we talked about, you said that you went a little bit more risk off. Maybe we can talk about this as well. You went a little bit more risk off, right?
Well, risk off in terms of swapping out of certain tokens into like Bitcoin and stuff. So I didn't go risk off all the way to USDC, but for me, Bitcoin is already relatively risk off.
Okay, so you are still
I'm still fully invested in risky crypto assets. Yeah, it's interesting. I'm not sure if I should swap because my main case is still that we will have it makes no rational sense, Like on the one hand, you think like on the one hand, the backtest shows that holding USDC and stuff is worth it, but on the other hand,
Mm.
you kind of feel the greed of not being fully exposed.
Yeah, sure, yes.
So it's really like a kind of a battle and a struggle, to be honest.
Mm.
So maybe it's good for your discipline actually to take some risk off and just have some of your portfolio in USDC. And
Yeah,
yeah,
yeah. Let's
yeah,
keep our listeners
yeah,
up to date. If we do it for now, I don't
yeah,
do it. I think you won't do it as well. But if you change your mind, please let us know.
yeah,
I think it's a mistake for now that I haven't done it in the past. But to change it right now, it doesn't make much sense, even from a greed point of view. I think I have my greed under control. But I think, yeah, what if the market goes down, let's say a week from here on, and we get to below 50K? People will get bearish, and then they think, okay, the end will not end, the year will not end as good. And what will happen? The year will end good because a lot of people think that the year won't end as good. Yeah, it's just
yeah.
so crazy. Yeah. So yeah, what about you? Anything exciting for you?
Um, well, I want to dive deeper into some more play to earn games, so that's pretty exciting. So, Sin City was recently announced, and it has some really good backers. But
Hmm.
so that's a new mafia style metaverse play to earn kind of game. And I was surprised, but it already has like it only was announced like this week or something, yeah, and it already has 30K Discord users, and
Hmm.
they already have like people in the voice chats all the time, hanging out there. So it's amazing how much traction these play to earn games and crypto games are getting right now. And just as a comparison, Patrick, um, Radium, that's probably like the biggest protocol, right? TVL on Solana.
Yeah,
So
roughly. Yeah.
so Radium has 51K Discord users. And so Sin City, it has 30K Discord users just from the announcement.
Hmm.
There was not even like a picture of in-game screenshot, a video, nothing. So I
Hmm.
think there's a huge excitement right now for play-to-earn games. And there's also another game that seems interesting to me, which is called Synergy Land. And I still haven't looked into
Uh-huh.
it, but it's kind of like a Path of Exile type of game, but then play-to-earn. So that seems very interesting because I like Diablo.
Excel?
Path of Exile? Do you know Path of Exile?
No, what is it?
Oh, it's basically a Diablo 2 kind of game.
Uh-huh, okay.
You know Diablo 2, right?
Yeah, yeah, the hack and slay stuff, right? The 2D
Yeah,
stuff.
no, it's like isometric, so it's like yeah, very different camera angle, and yeah, so it's you click basically and you kill stuff. But
Yeah.
I like these kind of games, and yeah, Synergy Land is the first one that I know of that does this in crypto, and it also has some traditional gaming companies as as people who are working on it. So people from traditional
Hmm.
studios, right, like Ubisoft and EA and these kind of things. So it's also
Yeah.
kind of interesting. And finally, I just want to say that, for instance, Illuvium, I think they have right now about 200K Discord users. And even though the game has not come out, it has already become so big, Patrick, that I can't even keep up with all the things that are happening.
Hmm.
And I spent a good amount of time of my week trying to keep up with it. So there are so many videos being launched every day, so many things happening in the community. It's already beyond the point where I can keep track of everything. So this is
Hmm.
just to say that I feel like we already are starting to see that play to earn and games in crypto are just inherently way more viral than
Yeah,
DeFi
for sure.
DeFi protocols. Yeah, of course, it could be that also there was a huge play to earn and metaverse price spike this week. So maybe that's probably also a big reason why there are so many people in the Sin City Discord. But I still think there's something just really powerful about games, and I need to spend more time on it. And unfortunately, I don't really spend as much time as I would like to
Hmm.
on this sector because it's really growing. And also, for instance, Arthur Zero X, he's also been investing in a lot of not games, but also like picks and shovels around the games. So
Hmm.
yeah, even some people like Arthur, like more traditional DeFi investors, are starting to get their way in. And also, for instance, Spartan Capital, from Jason Choi, he was also
Yeah.
invested in Cincinnati, for instance. So I find that even traditional, what I would say is traditional old school DeFi investors are moving on to crypto games.
Hmm. How do you go about finding those picks and shovels? I know you're pretty heavy allocated into Illuvium, and yeah, the results are really impressive. For me, it's too big of a concentrated bet, and I would like to get a little
Mm.
bit more broad exposure.
Yeah,
How do you think about this?
I think there are some picks and shovels already in this space. I think PYR is one, Pyre or something. And
Hmm.
I know that Money with Carter is very deep into it. And I think it is something basically it's like an engine builder, you know. So they it's like I don't know a technology company that provides all the connections to make. So as a game developer, you just have to make the game, and they will give the technology so to plug it into the blockchain and to also yeah basically to do everything around it. So this is kind of I would
Mhm.
say a picks and shovel because this allows normal game studios to quickly make a crypto game without needing to dive too much deep into new knowledge. And since crypto games are so lucrative right now, you see a lot of like smaller indie studios and stuff starting to make crypto games instead of normal games because it's how lucrative it is. So I think this is kind of a
Mhm.
good picks and shuffle if you like to try to play the wave of like new kind of crappier studios trying crypto. Um, yeah, and then there's also one around guilds, I believe. It's not youth guild, but it's like a different type of thing that also provides infrastructure for guilds. I think Arthur was invested in this. I think it's called GuildFi, but to be honest, I don't know very much about this. In general,
Mhm.
I'm not really a pixel shovel kind of person, so I prefer to take like a concentrated bet on something or just a complete basket like MVI or TCAP or something,
Mhm.
and not pick and shovel. But yeah, it could definitely work. For me, it's also something I don't really have any alpha with because um, I don't know too much about the technology of building a game, you know, and so if a lot of picks and shovel plays, they are technology based, and since I don't have any experience making a game and working with like Unreal Engine and these kind of things, I have no clue if something is valuable or not.
Mhm.
You see what I mean? So, for instance, I know that there's this company in gaming, and they do nothing but make trees, and they make the
Yeah.
freaking best trees. And
Yeah.
you would never say that this would seem kind of like a boring company, but apparently trees are really hard to make in a video game. And
Yeah.
this company specializes in just making trees, and they are super rich because all the games want to buy their trees. So
Mhm.
see, so you it can be very counterintuitive to what is a good pick and shovel basically in the gaming space.
Mhm. What do you think about this theory? So the so it's a theory out of Julian again, and he basically he tries not to be right. He just tries not to be wrong. From a concrete point of view, this means whenever someone gets into crypto, he shouldn't look for to get into Cardano or some kind of riskier coins. He thinks, okay, if you wanna have uh, the market exposure just by Bitcoin, and if the crypto market goes up, Bitcoin goes up, and yeah, it's basically the most legit asset and the most established one. So you don't have the biggest upside, but you also have the not the biggest downside. And I'm thinking right now, so Bitcoin is not a picks and shovels uh, um, thing for crypto because there's Ethereum and other things, but it's more like a uh,
It's a beta play.
yeah, exactly. And could do so. My question is basically, do you think that Axie Infinity could be the better play for play to earn?
Um, I'm not sure. I'm not sure. I think Axie Infinity is its own crazy thing, which is kind of like idiosyncratic and different than any other play to earn game. So yeah, for instance, when Axie pumped earlier this year, the other play to earn games didn't pump, right? So
Mm,
I don't think the correlation is necessarily that high between Axie and other play to earn games. And also, I believe, well, I haven't checked to be sure, but I'm pretty sure that like this week there was like a play to earn a metaverse pump, and I don't think Axie pumped, for instance. See, so this is not very
mm,
correlated. I would actually say if you want to diversify your play to earn, then get Axie. But if you want to have like a beta play on play to earn, I would still think MVI is still a very good candidate because um, it's basically a good basket with good tokens and basically experts who are, you know, working on play to earn every day, who are reallocating it every month or
mm,
something, right? So they do the work for you. So I think MVI is still a very good basket to own, and also I think also like Yield Guild is also still very good as a basket because they are basically a collector of communities, and because they are, you know, they have basically all the communities of all the games. Eh? So Yield Guild has
mm,
like an Axie part, an Illuvian part, a Sin City part, probably a Synergyland part, and so they get very. They obviously enter every new play to earn game very early, and they know what's going to be hot and what's going to be cool because of their
mm,
communities. So I think they will naturally be a great investor in a lot of play to earn games, and they have also done, you know, They also buy a lot of things like they buy land in Ethereum, or they buy special assets in
Oh,
new games
interesting.
that they think will go up a lot. So they have some kind of like semi insider knowledge on what's going to be good in terms of play to earn, and they are investing. They're also like an investing guild kind of. So I
Mm,
think Youth Guild would also be a good proxy for a beta play on play to earn.
mm. Yeah, I think I will do more research about MVI. Uh, yeah, because I think it's you almost need at this point right now in your portfolio some kind of play to earn slash NFT exposure, and I don't have it, and I think it's a mistake, even if it's just 1% or 2%. And yeah, so thank you. I will do a little more research about this, and maybe I can let the listeners know next week if I transition some of my funds or not. But I'm thinking right now to transition some of my funds from DeFi plays into this bucket because I see more growth opportunity
Hmm.
in there right now.
Yeah, I think it's fair to put a small percentage of your portfolio, at least like maybe 5 to 10% in play to earn slash NFT bucket.
Yeah, I'm thinking about this so long. I've thought about different opportunities like the MBI or Illuvium or Axie Infinity or some smaller coins like Aurori and stuff like this. And there's so much stuff going on. I feel kind of overwhelmed, and maybe I should try to find the better play and don't try to be right, but don't try to be wrong as well. And I think having no allocation is being wrong, and trying to be right is way too tough. Way too tough.
Yeah,
Okie
I agree.
dokie. Okay, dokie. Do we want to transition to the last point, our portfolio challenge?
Yeah, let's do it.
Okie dokie. How did your week go? Where was you last week and where are you right now?
Yeah, sure. So last week I was at $995, and now I'm at $1,070. And if you look in terms of Solana terms, I actually went down by a little bit, I think. So last week I was 4.959, and now I'm 4.954. So
Ah, okay.
I'm practically the same as last week, which is kind of weird since yeah, how is it even possible? I guess I made a lot of costs. I yield farmed a little bit, but to be honest, this was not a good week for me in terms of yield farming. I was
Mm,
in the wrong farms basically. I was in Almond, and Almond went down a lot, and yeah, basically with the amount that I have, it is also hard to swap my element actually on Jupiter. So you need a certain
mm,
amount of element to be able to swap it to me even, and that was even not feasible for me. So this was not a very good week for me. Going forward, what I'm thinking, Patrick, and this may be a little bit weird, but I'm thinking of trying to pay the Mango fee. To use Mango, you have to make an account, right? And it costs like
uh-huh.
0.035 Sol. So this is like a week's worth of yield farm almost. So I'm kind of wondering, should I do it or not? But I think it's just an investment for the longer term, because investing in Mango allows me, or like opening a Mango account allows me to go with some more interesting pairs. Like I can, for instance, enter the Cope USDC pool on Orca, which has a pretty
Ah,
good
okay.
APR, and no of the other protocols, the borrow lending protocols, offer Cope, for instance. So Mango offers a pretty
Mm.
decent selection of coins. So yeah, I'm thinking of doing that, but I haven't decided yet. What about you?
Um, yeah, before we talk about me, the 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 Orca the Orca pool you just mentioned.
Mhm.
Why do you have to be on Mango to get in there? Can't you just go to Orca? I don't understand. What does Mango do which not possible without Mango?
Yeah, so the pool on Orca that I have an eye on, it is called the USDC and Cope pool.
Yeah.
So what I could do is swap out my Solana for USDC and Cope, and then yield farm on Mango.
Yeah.
But then if I do that, I pay the swap fee, uh, and I don't want to pay the swap fee because the swap fee is kind of a lot, you know. So
Mm.
what I would rather do is put both basically put my Solana and put all my assets into Mango, and then borrow USDC and cope against it. But then, of course, I can only borrow very
Ah.
little, of course, yeah. So my base amount is a lot smaller than if I were just to swap it. But I think it's still worth it because of I don't have to pay any swap cost anymore,
Mm.
or almost no swap cost. I may have to swap a little bit at the end due to impermanent loss and these kind of things,
Mm.
but I don't have to swap. So I think, yeah, I think swapping is still quite kind of expensive to do. So unless you make crazy yields on a weekly basis, and if with the small amount that we are talking about, I think it's sometimes not worth just swapping in and going for whatever is the best pool.
Mm.
And also, if I were to do that, I would also take cope risk, of course, right? And
Yeah.
I am not bullish cope, so so that would be pretty much a bad play because I would probably lose more in cope depreciation than I would gain in yield on
Mm.
Orca. So that's also one reason why I don't want to do it.
That is interesting, and I never thought about this. To save some swap costs, but it totally makes sense. So the swap fees are roughly 0.25%, right?
Yeah, it depends on the thing, but yeah, I think so.
Yeah. So even if you have a bigger amount of money, it's percentage-wise, so it should be
Yeah, that's true.
irrelevant that
That's true.
if we
No,
do it on 1,000 or 10,000. But the more I learn about yield farming, and by the way, guys and girls, stay tuned. We might publish some courses around this for free. But I think there are those mistakes and expectations in yield farming. I need to learn on my own. And maybe I can use this as a transition for my portfolio this week.
sure.
So my portfolio got up in USD value, so I got from 977 to 1020, so a roughly $48 increase. But my sold value got totally wrecked. I got from 4.96 down to 4.72, so almost a quarter Solana lost. And yeah, I was wondering since yesterday evening when we calculated it, and I was thinking about, okay, what did I do? And I basically went from one farm to the other, and then I made some swaps to be most likely eligible for a potential airdrop on Jupiter. I did a couple of ones, and right now I'm losing a quarter of a Solana, which is roughly worth about $50 right now. And yeah, it's just the hidden cost, and I, I think that I really underestimated the swap fees. And I also read an article about leverage yield farming. And even if you take a look at leverage yield farming, there are a lot of swaps going on there as well, because you basically provide liquidity and then you borrow assets, and this is a swap in there. And even if you do leverage yield farming, where you can basically farm like 3x or 6x, it doesn't make sense for a short period of time. It just makes sense if you stick it at least in there for 14 days or so. And then imagine you do yield farming with a couple of swaps and you get the normal yield, let's say 70% APY, or let's say even 50% or so. I think the swap fees are super underestimated, at least from my point of view, and I think this is a failure. So what did I do last week? I got into a Sol USDC pair because I thought that the market will tumble a little bit, but the market went up a little bit, so my overall value decreased, but I lost some SOL value due to the swap fees most likely. And obviously, this morning, right before we exited our position, the market goes down quite a bit, and so there was an opportunity to make this bet work. But yeah, it's fine. It's just a long-term thing. And yeah, so for me, the biggest learning is, hey Patrick, try to minimize your swap fees. If you have a theory behind it, let's say a potential airdrop for a protocol, it could make sense, but even then it's a gamble. And yield farming is more like a long-term strategy. Even though if you have the 10,000% APYs or the 500% APYs or even the million% APYs, Mark and I, we were taking a look yesterday evening at a leverage yield farm where you could get above 1.3 million% APY, but even then it didn't make that much sense. And yeah, so my learning is basically um, I try to pick a yield farm right now where I most likely don't have to do a lot of swaps in the future and build up my Solana value a little bit more. Um, in order to outperform Solana, which is basically the goal with this challenge, there are different ways. You can do yield farming, you can do staking, you can do lending, you can do all the things, you can do trading. But for now, I don't have the mental capabilities and capacities to go into those trading things. So for me, I think the best thing I can do right now is to minimize the swapping fees and to do yield farming with a quite nice yield, where I can already say that your sheet mark is really helpful to build up my Solana again, because I kind of got wrecked. But if there is an airdrop one day from the Jupiter aggregator where I made some swaps, I might end up as a big winner, but it's a total big gamble. What do you think about this?
Yeah, so I take it you did some swaps also with your, entire amount, right? Not just with,
Yeah,
yeah. So, but yeah, of course, if you swap a lot, then you pay a lot of fees, right? So you have
yeah.
to think of it like this. Let's say you swap every week, and let's say you change your investment every week. That is just to make it easy. It's 0.3% roughly that you pay per week in swap fees. Yeah? So,
Mm,
and if you do that times 50, 0.3%, that's still quite a lot, So that's still a
mm,
15% that you are losing in APR. So You just think of a normal, I don't know, normal yield, but let's say a normal yield is between 20 and 30%. Let's say that you lose 15% just from swapping, and then you lose another 15% just from inflation. So yeah, you have to be careful with it.
Yeah, I really underestimated quite a lot. Do do you think there are some hidden costs out there which could also get underestimated? So the swap fee is one thing. Do you think there is something else?
Yeah, I mean, there's also something with slippage, I think, yeah, I don't know, like it feels like the swap fee is not the only cost element when you do a swap, obviously. You also have some slippage because of the pair, and that can also still be influential, even if you do not a huge swap. So this is something to take into consideration. And also, you know how you can change the settings when you do the swap, right? And you can set it to like
Yeah.
0.1%, 0.5%, 1%, etc. I usually on Solana I set it to the lowest, and then maybe I have a couple of failed transactions, but then I try to do it just again, you know. So
Yeah.
I think there it also saves me a little bit on the swap fees because let's say you do, I think it's called slippage tolerance. Like let's say you do 5% slippage tolerance, yeah, you can get wrecked on that if you do bigger swaps. So you have to be careful with that
Hmm.
as well.
Hmm. Yeah, interesting. The slippage is usually at around the lowest is 0.1%, right?
Yeah, usually yes.
Have you ever taken a look? So this is the max slippage. Have you ever taken a look at what's the real slippage about the of those transactions?
What do you mean? What's the real slippage?
Yeah, let's say for example, you put in $1,000 and you enter that the max slippage can be 1%. So the max slippage is $10. But it's not that the max slippage will get maxed out. It's more like $3 or $4 because you just set the limit and you don't set the exact slippage that you want to occur. So my question is, do you think, or have you ever taken a look at if you put in 0.5% max slippage, for example,
Hmm.
if it gets maxed out or if it stays super low, so it's like 0.05%, so 10 times lower. Any idea about this?
I think it doesn't always get maxed out, from what I recall.
Mm.
And I think, yeah, if you put it like at the max slippage amount, so the highest slippage, it can be actually huge, a huge difference. So I've definitely
Yeah.
noticed that. Yeah, it's very disappointing when you see in advance, like, your expected tokens, and then you get like 10 tokens less or something. So
Mm.
yeah, it can definitely be a huge impact. So you have to be careful with it. But yeah, I don't know if there's an optimal way to do it. But yeah, just be careful. And with bigger transactions, be sure to reduce your slippage.
Mm. Yeah, makes sense. Yeah, I will try to take a look at this as well because I think there could be hidden cost, but I have no idea if that's um a big point. And yeah,
Hmm.
okay, perfect. Thank you.
Sure.
Anything else that you would like to discuss, or should we wrap it up?
No, let's wrap it up.
Okie dokie. So yeah, quite exciting weeks laying ahead, I guess. So I think today the market could tumble due to two facts. It's the last Friday of the month, so guys and girls, there are some options expiring. So yeah, uh, don't get too puzzled by the market volatility. It's a feature, not a bug. And let's hope that the market stays healthy and we don't go into bear market. I'm pretty confident that this won't happen. But from this point of view, yeah, just hodl, 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 and everything will work out fine. And we see us next week and maybe even before this with a video and some guides about yield farming on our YouTube channel. So stay up to date, subscribe, like, and all those things. And yeah, stay healthy and see you later, Mark. Take care.
Bye bye.